Welcome. If you have not yet acquired Bitcoin, you're probably thinking what I hear all the time. Oh, it's too late for me to get into Bitcoin. If only I had bought in 2017 at $1,000 a coin, or maybe even 2020 at $10,000 a coin. But at nearly $100,000 a coin now, that train has left the station for me. Well, in this video, I'm going to explain clearly and succinctly not only why you're not too late to Bitcoin, but actually it's still quite early for you to leverage Bitcoin to protect and grow your wealth. If that sounds like an outrageous claim, hit the like, fasten your goggles, and let's get started. So I'm going to be making just 2 points. And point number 1 is that Bitcoin is the proven ultimate store of value asset class. Now, don't just think of Bitcoin as another stock in your portfolio whose performance is tied to a company's business operations, profits, or balance sheet. Bitcoin is an entirely new asset class on the order of global asset classes like bonds, real estate, equities, and gold. Bitcoin is decentralized, borderless, fixed inflation, and fixed supply monetary technology that works as digital money in our digital age. Now, if that sounds like a lot, it's very important that you do your own research to demystify Bitcoin and learn why it is so revolutionary. A great way to start is through my video series, Why You Can't Afford to Ignore Bitcoin, which will take you just 40 minutes to learn the fundamentals of Bitcoin. For this discussion, let's continue. So this is a picture of the major financial asset classes investors use to protect their wealth today. You can see that the number one slice is real estate at $380 trillion. Then bonds or fixed income investments at $140 trillion. And then equities or stocks, which are $110 trillion. Then money, which is the M2 supply, and then gold, and then lastly, Bitcoin. And you see that Bitcoin is at 0.27% of the total pie. Now, why do people use these assets to store their wealth? Well, it's because money is broken. And we're constantly looking for better stores of value. And to hedge our bets, we'll often diversify among several of these, just hoping that they don't all crash at the same time. Now, why do we say that this upstart new asset class of Bitcoin is the superior store of value, better than all the rest of these? It's because there are risks associated with holding any one of these asset classes. Investors will always seek the safest, least risky asset to hold and to store their wealth. So let's look at a recent expose by Stackhodler, where he talks about the risks associated with each of these asset classes. Now, we're going to come back to this a little bit later, but for now, I want to drill down to where he calls out the asset classes and the risks. So you can see the first one here, equities or stocks. And he says equities can be endlessly diluted, meaning the companies can issue more shares. They rely on business execution. They have competitive risk, regulatory risk, trust busting risk, jurisdictional risk, and key man risk. Next is real estate. And anyone who has ever owned a home or a rental property will be familiar with maintenance costs, property taxes, physical risk of deterioration or complete loss, insurance costs. And these are just the risks that threaten to erode your value that you're storing in real estate. And the next one is debt instruments or bonds. They have default risk, currency risk, and no fixed supply. Next, he comes to the Bitcoin asset class. And he says that Bitcoin as an asset class is comparatively simple. It has a fixed supply of 21 million, a known issuance or inflation schedule. It's neutral, not tied to any single country's future, and it can be held indefinitely at zero cost. So those are the risks associated with the inferior asset classes, and then the reason why Bitcoin is the ultimate proven store of value asset class. So this is a bold claim, and unless you understand it, you will not have the conviction to be able to benefit from Bitcoin. So take some time to do some study, and at a minimum, watch my video series and learn why Bitcoin has a 15-year proven track record as the ultimate store of value. So now you understand point 1, which is that Bitcoin is the proven ultimate store of value asset class. And now we can come to point 2, which is that Bitcoin will grow to a meaningful share of global wealth. Even though Bitcoin is the proven ultimate store of value, today it is an insignificant 0.27% of global wealth. In reality, the vast majority of individuals like you, corporations, financial institutions, and governments remain largely unconvinced of point number 1. Most are not paying attention or are unwilling to do the work to learn about Bitcoin. But if you watch my videos, you know that Bitcoin is here to stay and growing exponentially every year. Growth and adoption are happening on many levels and by individuals, institutions, and by governments. By individuals, we can look on the blockchain and we can see that addresses holding small balances have been growing steadily over the past 15 years and are at near record highs today. For institutions, we see new headlines every day reporting on wealth managers adding the Bitcoin ETFs to their portfolios and corporations adding Bitcoin to their treasury reserves. For governments, we talked about country adoption in my last video, but especially with the Bitcoin-friendly orientation of the incoming US administration, we're seeing countries are racing each other to adopt Bitcoin as a treasury reserve asset or to capitalize on renewable energy resources for Bitcoin mining or just to attract technology innovation in the new digital economy. So all this growth and adoption begs the question, how much bigger can Bitcoin grow? Again, going back to Stack Hodler's post, he asked the question, how high can Bitcoin go? And he says, most people can't handle the answer to this question. Right now, Bitcoin is the 8th most valuable asset in the world, comparable in size to Google, Amazon, and Saudi Aramco. But it has vastly higher upside than those companies. We know that Bitcoin's on trajectory to surpass gold's market cap, which actually would then put Bitcoin at a price per coin of $875,000, but that is just the beginning. Going down, he says, instead of comparing Bitcoin to individual equities or gold, we should be asking what percentage of wealth stored in inferior assets will be taken over by Bitcoin. So for that, let's take a look at the global wealth that are stored in inferior assets. So we already heard from Stack Hodler on the risks associated with these inferior asset classes and why Bitcoin is the safest and ultimate proven store of value. And so eventually smart money will migrate into it. And it's a question of how much of the global wealth will be taken over by Bitcoin. And Stack Hodler proposed a modest amount, could be 10% of global wealth. So let's take a look at what that would mean if 10% of global wealth were to come into Bitcoin from these inferior assets. So at a near spot price of 100,000, Bitcoin would have a market cap of $2 trillion, and the inferior global assets would all add up to $744 trillion. So taking a projection of 10% of global wealth taken over by Bitcoin from the inferior assets, that would put a market cap of 74 trillion into Bitcoin, which is 37 times the current market cap of 2 trillion. And 37 times the current price of 100,000 would mean a Bitcoin price of $3.7 million per Bitcoin. So that is definitely much higher than what we have today, but that is the implied market cap if Bitcoin were to capture 10%. If Bitcoin were to capture actually even more, as smart money starts to flow into Bitcoin when it realizes that Bitcoin is a superior asset for storing value, you could have 20%, which would equate to a Bitcoin spot price of 7.4 million, or some talk about hyper-Bitcoinization, where Bitcoin becomes the recognized global reserve currency for global wealth, and 50% would at that point be a modest amount of $18 million per coin. So you see, these are just a model showing different range of prices that Bitcoin could arrive at based on how much of the global inferior asset classes it captures. So to bring it home, let's hear from our favorite laser-eyed permeable Bitcoin champion, Michael Saylor.
I think that Bitcoin is sound money. It's the technically superior asset class compared to the dollar, the euro, the peso, the bolivar, compared to a stock index, compared to gold, compared to silver, compared to everything you can conceivably buy. It is technically, thermodynamically superior as an asset. The point is, if you have the superior asset, it's going up forever, Laura. Forever.
Right.
So remember, Bitcoin is the proven ultimate store of value asset class, and Bitcoin will grow to a meaningful share of global wealth. There is no upper limit on Bitcoin, and it will go up in value forever. With that timeline, and with a projected millions of dollars per Bitcoin, you are most definitely not too late to Bitcoin. So thanks for watching, and please hit the like and share this out so that others can join the Bitcoin revolution. And until next time, be wise, be safe, and stack stacks.